All right. Good evening, guys. Count it Tortoise Capital. This is the nightly strategy podcast for August 30th, 2021. Let's go ahead and get started with the market health check. So today was a pretty strong up day in the market. Yesterday was the beginning of the, Friday was the beginning of the gains that broke to an all-time high. Today was a micro gap up, and then the low of the day was still higher than the high of Friday. So that's really a positive sign. And it pushed through Z2 to make an all-time high and closed at an all-time high close outside of Z2. So that's a really positive condition. The 3-period Hull is strongly high. The RL10 is still in the fall, but is at Z2 as well. The dragon is straddling the edge of the river, which is a good sign. It's not a runaway move yet. But the slope of the river just took a turn for the up. So this is getting stronger even on a 30-day basis. When you combine the slope of the Bollinger Band Mean 30 and the slope of the RL30, that's really, really strong, and plus the RL10. So everything pointing to the upside as the last plane left Afghanistan today. Let the recriminations begin, The 2.5% sell-off is now at the Bollinger Band Mean. So that's really the price we got to preserve. So that's the Bollinger Band Mean and the PSAR flip from today and the 2.5% sell-off. So this 442 is a really strong support level. Personally, I'm not going to let this get below the one-day low. I'm not going to give back any of this. That's where my stop is going to be like it. I could live with 450. As a round number, but really that's about 450 and a half right there. The second logical place would be at the edge of the river, but even that feels like it's given back too much to me because you're giving back 2 days of really extraordinary moves. I could live with, I guess, maybe the top of the dragon would be at 448. But certainly nothing lower than that. But I'm staying personally with this higher stop here at like 450 and a half. But everything else is really, really strong. I mean, this move off the low. Now that sell-off looks like a panic, doesn't it? Looks like just somebody collecting inventory and buying on dips is what that looks like now. So this is one of the reasons why the channeling and overreaction system, it always has you buying when things feel horrible. And then 7 times out of 10, it gets a nice little rebound. This is like 2 legs up. So if you take the first 3-day recovery and then a little bit of sideways chop to the edge of the river, and then 2 days more of follow through, there's still a move up to 456 is available, which is the Z3. So all systems go. All right, now over to the sectors now. All right, so we have the S&P at plus 0.4. Treasuries at 0.26. Emerging markets lagged a little bit at 0.21. You had diamonds slightly negative at minus 0.14. And then you had a strong move up in the Qs at 1.12. And then the weakest sector, the Russell at minus 0.4. So this is really a mind split. The U.S. market doesn't even know what it wants right now. I mean, the The S&P large caps had a nice day, but the Dow large caps were in the negative. And the treasuries were positive, but the Russell was negative. But tech was strong. So that is really there's not one clear narrative that gets all of that in one easy explanation. So I'm not even going to try on that one, other than to say, it's all tech right now. So consumer discretionary up 0.45. Now we're going to look at the sectors that were better. Oil 0.5, clean energy 0.56, ARC, innovation, blockchain, Mexico, lithium batteries, consumer discretionary, and tech up at 1.08. So that's the usual suspects of all tech and all the time. You had the FANGs really strong at 1.58, and then Ethereum at 5.14. Now, the targets that were useful today this is telling you something important about where the juice is. PayPal and Squarespace, I want to highlight those two. So that's your financial disruptors at 3.6 and 1.5. Apple, Tesla, Microsoft, all very, very strong. And Tesla closing above 730. So Tesla feels like it's back. But again, our two little stalwarts there, Apple 3%, Microsoft 1.3. That's pretty strong. So this was all conventional tech to the upside. And a pretty good array of other sectors, tech, discretionary, and staples. That's a pretty wide range, and makes it very clear where the gains are. Underperformers, we had blended commodities 0.36, agriculture 0.36, lumber 0.31, Archenomics 0.11, the broad-based large cap blend was flat. The other lumber minus 0.05, and then materials minus 0.1. Commercial real estate minus 0.2. S&P Bios 0.3. Moonshots 0.6. Bitcoin 0.64. Brazil, Mexico, VIX all down between 0.6 and 1%. Now the whole energy complex. So energy 1.2, wheat and precious 1.3, finance 1.4, oil exploration 1.65, and then our negatives, the negative targets. So Robinhood 7%, space, Virgin Galactic 4.5. And now the industrials, U.S. Steel, 2%, Devon Energy, 1.9, Cliff, 1.5, TX, the steel company, 1.16. So the metals are like, again, a special case, the special case of materials. When materials are good, steel is often better. When materials are bad, it's not unusual to see steel even worse. So you get like a leveraged play. Yeah. And Peter confirming that the Zoom sound and video quality is far superior to GoToWebinar. So, I made a policy decision. I've already canceled my account with GoToWebinar so that I don't accidentally buy another year at $3,000 for a corporate account. Jeez. Painful. So, and then Alcoa minus 0.18. So we'll be stalking the metals because that's what we do. We wait for those things to oscillate from peak to trough and then try to find those turning points to be the second mouse. So that's going to be clearly on our mind. Okay. we'll take a quick look at some of the trades from the chat room. So this was Zoran was framing McDonald's. I believe this is a daily chart. I can't tell because of the markups, but I believe this is a daily chart. And what he's got is he's looking for a 2-to-1 to get back to the daily high. Let me get my annotator on here. Yeah, so here's our, if this is our risk, then this is a 2-to-1 compared to a 10-day high-ish. So maybe, no, this actually could be out. This has got to be hourlies. Yeah, so this is going to be the 10-day high here. Okay. Yeah, that looks more correct. So that's a reasonable 10-day high at the previous Z3 pinch and at the peak. And then this is like, you know, peak RL10 and peak Dragon are right at this price level, about 241. And so he's looking at, this was the first attempt to get back to the 10-day high, which failed. And now we have like this little move and setting up like a piece, we've already had the PSAR flip, but we're setting up like an SSC. I almost see this as a double bottom. And then this is like an SSC. And it has to get above this price level. This is where, if it makes this move and starts to fail just short of 240, you got to decide, I think, just take it and capture that gain, which is about 1R. So if it doesn't get through 240 and starts to fail, I'm out of that trade. But if it gets through, it has to get through this, as he notes, the second position at 240.20, which is up in here, really at about 2R, I think. Third position at 245.20, which is up in right about in this range, which is breaking out above the previous previous resistance. So that all looks good. And then the short at 236 is just a PSAR flip in the usual way. And then there's no support at all in here until it gets down to this price level. So you can see that 234 is in range. And so I'd be looking at a second position at 234 based off this as a collapsing dragon with a double bottom. So if that fails, then this thing is really going south, right? So that's how I would read that one. This next one is an intraday. On Apple, excuse me. Pardon my yawning. I forgot I was on camera there. Took me to yawn in your face. Okay, so now we have Apple. This is on a 5-minute chart. And yesterday we had that closing Z3 pinch. So a really tight band in here. And then it immediately breaks out. And so he buys basically a 1, 2, 3 entry with a short risk box in here. And he notes the 30-minute high. And that thing is still working. Finds support, breaks to a second high. Now notice that the 60-minute high, the size of this is 1/2 of the size of that. So you can already feel like this is rolling over. And the 90-minute high, it barely increased. So now this is getting to be, this is a great exit right here. It's like, hey, that you get this pattern. Yeah, we call that in artillery terms, the max ordinate. and you can feel that the force of gravity is starting to pull it down once it achieves that peak. So that is really a good exit right there. And then we had this failure to fail. It did not fail back to the VWAP. It started to move out again. So he buys it with a tight stop at the PSAR and then picking up the Bollinger Band mean and perfect managerial exit for another 0.8 and a 3.5. That's 4.3 in McDonald's. That's how you do it. Well done. In Apple, I should say. Well done. McDonald's was the other trade frame. So in this case, he found the mover today. Apple was up 3%. And we knew that Apple has been a relative strength leader and had room to gain. So today he found the mover. Well done. And I'm really impressed with those exits. The managerial exit on this grinding bull that ran out of gas, beautiful. You could even maybe later in the day, except it's already too late in the day. If you saw this at lunchtime, you'd be willing to take that as a Z3 breakout, but because it's so late in the day, there's no reason to stick past here. You've got the move that was there. So nicely done. And standing by. Oh. Okay, so let's go to dashboard 1. And we're in bullish normal conditions and overbought on every dimension. That's strong. The risk Z is still warning us that it hasn't fully rolled over yet. But again, we like the possibility of rising lows in the bottom of the volatility band. I'm looking at emerging markets as a potential, as a tradable frame. And yeah, on the 10-day min pain, there's your winners: Microsoft, Diamonds, even Intel is in there. And then we saw some weakness in the steels like Nucor. Then oil exploration. The energy sector was lagging somewhat today. And Apple was a big winner, as was Facebook in the techs. Dow 30 tactical. We've got 5, 6, 7 dojis, a handful of channeling and overreactions. Plenty of auto framers still in play, which is surprising to me given how close to the all-time high we are in the S&P. There are some significant laggards in the Dow that have to play catch up, like IBM and Techland. United Health and Procter and Gamble kind of in the healthcare. Peter asks on the risk Z, with the Z score at minus 0.32, should we be swing trading? Well, it is trying to make the turn into the spring. So you got to look at that slope. So I am cautiously optimistic on the swing. Like I'm not looking to aggressively start new positions, but the swing trades in the leading candidates, I'm willing to trade on a risk, a risk reward basis. It has to be a compelling reason to take the trade. So there's not as many that are testing out that well. So we really have some real choices. And I would start all of these with like day one technique, meaning that I'm willing to tolerate the idea of a swing trade, but I want to make the money on the intraday trade, like say on hourly charts, and then keep 20% as a swing trade that is funded by the intraday trade. That way you're really leveraging the idea of swing trading one day at a time. That's what I would say on that, Peter. But once that thing turns into the spring, even though it's at minus 0.32, if that starts sloping up and it becomes springtime in the risk Z, then that's an indication that you can swing trade. So the fact that the market is discounting Afghanistan, it's just writing Afghanistan off, really. And what it's saying is, look, the only thing the U.S. can even do for the next 2 years. Look at Biden is a lame duck president already, and nobody is going to make a win out of doing more foreign intervention. So we're not going to do any foreign intervention for the next 2 years in a significant way. So that means the only thing they can do is compete to spend more money at home on infrastructure and projects for the people. And that's why the U.S. Large caps are doing well right now, because they're going to benefit from that $5 trillion infrastructure bill. So to me, the market is pointing up. It's saying it doesn't care about the wars that are no longer going to be fought. That's how I read that. In the ETF 30, only 4 dojis. Nothing auto frames out well. So that's really just a phenomenon of certain key elements in the U.S. market. Everything else is just kind of muddling through. And today's big movers, tech, both the Qs and the XLK were up large. And it was energy, finance, and Brazil in the red. So, pay attention to the techs. And when you see tech leadership, for example, I think you could be swing trading Apple and Microsoft. And I think if I go back one, I think you could be ready to swing trade IBM because that is showing a very favorable reward to risk. It was a doji and it's at 2.8 to 1. So it has some catch up to do for technology. In the auto framer, you got some, most of your choices, the top 4 choices are all in healthcare. So you could actually play that as XLV. As the sector. And there's the S&P healthcare right there. But, actually I would prefer, I think, United Health and Pfizer as the best reward to risk ratios by far in the auto framer. On the daily squeezes, you got DIA was pretty quiet today. The S&P was pretty close at 1.9. So this was not a runaway explosive move. This is characteristic of a grinding freight train leaving the station, getting ready to go cross country. So I think you got to respect that. Even MDY is getting in the mix at 2.3 and the Russell at 2 to 1. So the entire U.S. equity complex is compressed and ready to bounce. And then we'll wrap up just with the multi-time frame NDX. So Apple, clear winner today, not even close. The techs and real estate, and I'll expand that to include, emerging markets, Mexico, the S&P, discretionary, and XLY. That's pretty good stuff right there. All right, that's everything we got for today. Let's get this published and posted and be ready for tomorrow. Being judicious in our swing trades, but taking advantage of intraday momentum to get those positions on, says the coyote. Okay. All right. Take good care. We shall see you tomorrow.